I think it's a lot has to do with the fact that the macro is a little weaker than they thought, and the weakness that they were seeing is in the business to business volumes, as well as the industrial economy. They have a lot of exposure to the industrial economy in their FedEx freight business, which is their less than truckload business. That business kind of disappointed on the earnings, while its parcel business, express business, slightly beat expectations. The company is going through a major transformation. It's been operated as a kind of bloated concern for a number of years, and over the last couple of years, they've been taking proactive steps into kind of righting that and reducing costs. They're also, doing things that that management thought was kind of taboo, if you will. They're now combining their ground and express networks in certain regions, and they're going to, eventually do that in the United States. Right now, it's being done in Canada. They're restructuring their air network, and the really goal is to build profitable density. And the problem is that they've generated a lot of cost savings, but some of that cost savings has gotten lost because the macro just isn't as strong as maybe they thought it's going to be. And looking forward, I think it's very difficult for FedEx or really anyone that deals with the economy to kind of forecast where they think volumes are going to go, because we really don't know. There's so much uncertainty, as you mentioned earlier, whether it's the risk from tariffs, whether it's the inflationary risk that could come from tariffs, whether it's getting rid of the de minimis exemptions for low-valued freight out of China. There's a lot of things that could weigh on results, at least looking into the near future.
For companies like these, what winds up being their base case when it comes to tariffs and trade? Like, they got to do something. They got to say something. So what's their base case?
I don't really know if they have a base case. The base case is that we are going to operate in the environment that is given to us, and it's not going to be special to us because our major competitor UPS is going to have to deal with a similar situation. So I think they just want to know what the rules of the road are, so then they can kind of operate. As a lot of companies are holding back on CapEx because they just don't know. Are we going to? Is investing in Mexico a good thing or a bad thing for U.S. manufacturers? There's really a lot of things that are up in the air.
Yeah, it's interesting. I'm looking at the kind of the earnings estimates out there on the Bloomberg terminal, and the streets kind of got 15% earnings growth starting in their fiscal 26 year, their May 26 year, over the next couple of years. The stock trades at like 11, 12 times earnings multiple. That looks pretty attractive, but I guess you have to buy off on management's ability to execute, right?
Yeah, we don't do buy, hold, sell here at Bloomberg Intelligence, as you know. But at the end of the day, the things that they are doing today, when the demand environment is less volatile and more predictable, will be very good for margins. It's just like how long are you willing to wait for that to happen? Is it going to be 4 years until things normalize, or is it going to be in 6 months when things normalize? We just really don't know. And there's a lot of other things that can happen as well. The Trump administration has talked about adding fees and fines to ships that are not made in the U.S. that come to dock in the U.S. That could have an impact on air freight. Could move stuff to air freight because it becomes I guess more reasonable for certain items. So there's a lot of different things that can happen. We just don't know, as I mentioned earlier, what the rules of the road are, which are critical for us to figure out where things are headed from here. Because GDP expectations have been moderating, as and these companies, FedEx and UPS, are tied to that.